Welcome to The Explainer. Today, we're unpacking a really fascinating company, India Glycols Limited, or IGL for short. It is definitely not every day you see a single business operating in both green chemicals and premium whiskey. But IGL is actually right in the middle of orchestrating a massive transformation across these totally diverse fields. So we're going to break down exactly how they're doing it, and honestly, why anyone watching the markets right now should be paying very close attention.
All right, let's just dive right in. Here's our roadmap for today. We'll be looking at driving double-digit growth, decades of green chemistry, premiumizing the spirits portfolio, biofuels and Ennature Biopharma, and finally, their strategic restructuring plan.
First up, driving double-digit growth.
To really grasp the sheer momentum IGL has right now, we just have to look at their Q1 FY27 financial performance. Just take a look at this number, 32%. That is a massive year-over-year surge in profit after tax for the first quarter. Now, for a mature industrial conglomerate, a 32% jump straight to the bottom line, that doesn't just happen by accident. It is a super clear, undeniable indicator of highly profitable, laser-focused execution. And this illustrates exactly where all that profit is coming from. Gross revenue from operations made a huge leap, going from 2,503 crore in Q1 of FY26 all the way to 2,988 crore in Q1 of FY27. That's a nearly 20% jump in gross revenue. But here is the real kicker, the thing you should definitely take away from this. They didn't just sell more, they operated a lot smarter. While revenue was surging, they were actively reducing their debt levels, which drove their finance costs down from 45 crore to just 25 crore. So they're growing the top line while being strictly disciplined with the bottom line. Moving to Section 2, Decades of Green Chemistry. So you might be wondering, how did they build this kind of operational muscle? Let's trace their evolution. They were actually incorporated way back in 1983 as YoY Glycols Ltd. By 1993, their state-of-the-art R&D center had already snagged approval from the Department of Scientific and Industrial Research. And fast forward to today, looking ahead to 2026, they're pioneering digital technologies to achieve net zero emissions. It is incredibly cool to see a 1980s chemical startup completely evolve into an absolute industry heavyweight in green innovation and carbon footprint reduction. A prime example of this embedded innovation is what they call their 3x3 strategy for cost effectiveness. IGL operates 3 integrated manufacturing facilities strategically located in Kashipur, Gorakhpur, and Dehradun. By keeping these diverse plants, which include grain-based ethanol capacities, running at optimum levels, they seamlessly balance out supply chain shocks. Basically, it acts like a giant operational shock absorber. If ethanol raw material costs suddenly spike in one area, their integrated network absorbs the impact, allowing them to directly mitigate those rising expenses. Honestly, it's a total masterclass in operational resilience.
All right, Section 3, premiumizing the spirits portfolio.
So while they have this massive industrial and chemical foundation, IGL is also making some incredibly savvy, high-margin moves in consumer goods, specifically with Amrut's Macintosh Special Edition whiskey. This is visual proof of their aggressive premiumization journey. IGL formed a highly strategic partnership with Amrut, which is a brand that famously sells across 53 countries. And IGL's role in this? To invest, distribute, and market these prestigious brands in select North Indian markets. They are actively targeting the semi-premium segment, which, by the way, is a massive 12 million case market. Now, what's really brilliant is the business model behind these beautiful bottles of Amrut Fusion and Amalgam. IGL isn't just distributing them, these spirits are actually bottled at IGL's own Kashipur and Gorakhpur facilities. That means IGL handles the whole shebang, the entire manufacturing and marketing process. And the absolute best part for their bottom line, the profit goes straight to IGL after paying a per-case royalty. It's just a highly effective way to leverage their existing manufacturing excellence into high-margin consumer goods. And that strategic push is paying off big time. This premiumization, combined with their already dominant market share in country liquor across UP and Uttarakhand, drove their Q1 spirits revenue up 5.3% year-over-year. They hit a very impressive 361 crore. Their EBITDA for this segment also grew by over 14%. They are successfully transforming their spirits portfolio from a volume game into a premium value game. Section 4, Biofuels and Ennature. Biopharma. IGL doesn't just pour premium spirits, though. They're also deep into technical sciences that literally fuel our future and advance plant-based human health.
Let's define this crucial segment right off the bat to clear up any industry jargon. Ennature Biopharma, or AB, is IGL's natural ingredients division. Built on nature, technology, and innovation, EB provides highly specialized plant-derived active pharmaceutical ingredients, or APIs, and nutraceutical solutions. What you really need to know here is that they are actively pushing into the heavily regulated US and European markets with brand new health and food supplement molecules.
And let me tell you, the market is responding with incredible enthusiasm. EB just reported its best ever Q1 with truly staggering metrics. I mean, revenue shot up 65% year over year, and EBITDA, it skyrocketed an unbelievable 188%. This isn't just a fluke either. It's sustainable growth, driven by major new customer acquisitions, the launch of new nutraceuticals, and the aggressive expansion of their nicotine derivatives business. Their deep investment in plant-derived science is absolutely paying off.
When you compare this biopharma wing to their biofuels segment, you see two very robust, yet totally distinct pillars of growth. On one side, you've got biofuels, utilizing grain-based ethanol capacities to sell directly to oil marketing companies in India. This segment alone brought in 323 crore in Q1 revenue with a 19% growth in EBIT. On the flip side, you have biopharma, dealing in high-value, scientifically complex nutraceuticals. So one provides steady, massive scale, while the other provides rapid, high-margin technological growth. It's a great balance.
And finally, Section 5, the Strategic Restructuring Plan. So you've got chemicals, premium spirits, biofuels, and biopharma all under one roof. How do you manage all of that efficiently? Well, the strategic plot twist here is the NCLT's official approval of IGL's demerger plan. Rather than continuing as a single, sprawling conglomerate where the value of high-growth segments like biopharma might just get lost in the mix, they are deliberately breaking things apart. This NCLT-approved demerger is designed to replace the conglomerate structure with pure-play companies. This creates clearly focused business entities, allowing each to unleash its full potential and ultimately unlock some serious shareholder value over the medium term. The after-state of this restructuring is incredibly clean. The original entity, Bio-Glycols Limited, retains its focus on biopolymers and chemicals and remains listed on the exchanges. Meanwhile, they're spinning off two entirely new entities, IGL Spirits Limited, which will house the premium Indian-made foreign liquor and country liquor, and Ennature Biopharma Limited, focusing solely on biopharma and nutraceuticals. The biggest takeaway here? All three of these specialized companies will be listed and trade publicly on the NSE and BSE. This allows the market to assign focused capital to each specific industry. It really is a bold, highly calculated transformation of a legacy company. They have the historical foundation, they have the double-digit growth, and now they have the optimized structure to scale even faster. Which leaves us with one incredibly exciting question to ponder. With three newly focused, pure-play entities hitting the public market, which piece of the IGL puzzle, the legacy of green chemistry, the high-margin premium spirits, or the explosive growth of biopharma, do you think will dominate its industry next? Keep an eye on these three for sure. The next chapter is just beginning. Thanks for joining me on this explainer.